Hi and welcome back to the Freedom Law Group Law Library. In this video we'll be discussing how to qualify for a home loan without tax documents. Let's dive in. If you've lawfully revoked your election to be treated as a statutory taxpayer, then congratulations. You've taken a major step toward financial sovereignty. But now you may be wondering, how does that affect buying a home? Let's talk about that. The truth is, the mortgage process changes a bit once you step outside the traditional income tax system. Most mainstream lenders, banks, credit unions, and federally regulated institutions follow strict federal guidelines. And those guidelines are built around one main thing: your federal income tax returns. In fact, one of the most common tools used by underwriters is IRS Form 4056-T, or the updated version, 4056-C. That form allows the lender to pull your tax return transcripts directly from the IRS. If you can't provide transcripts for the last 1 to 2 years, your application is often flagged or denied altogether. Why? Because tax returns are easy to verify, universally accepted, and give underwriters cover from liability. No return? No loan. That's the usual playbook. But here's where it gets interesting. If you've just completed the revocation of election, or you're planning to do it soon, and you still have tax returns on file from the past year or two, now is the time to act. You may still be able to qualify for a conventional mortgage using your most recent filings. That window doesn't stay open forever. So if you're thinking about buying a home this year, and you still have valid returns in the system, lock in your mortgage now, before the IRS stops reporting on you entirely. Now, what if your revocation happened a while ago, or if you're fully outside the IRS system and no longer have any tax filings to show? No problem. You still got options. There's a rapidly growing marketplace of non-traditional lenders, private financiers, hard money lenders, and alternative mortgage providers who don't care about your federal tax returns at all. Instead, they look at your bank statements, your assets, your overall financial profile. These types of loans go by a few different names: bank statement loans, no-doc mortgages, and asset-based financing. They usually require a higher credit score, a larger down payment, often 20 to 30%, and yes, slightly higher interest rates. But they're 100% legal, available in all 50 states, and increasingly popular among people like you, entrepreneurs, American nationals, crypto investors, and others living outside the old system. And here's a key tip for those of you playing the long game. If you're not looking to buy this year, but maybe 3 to 5 years down the road, start saving now. The average American hands over $7,000 to $10,000 a year in federal income tax. If you're no longer filing, redirect that money into a dedicated savings account for your future down payment. In just a few years, you could have enough to put down on a house without ever touching the traditional lending system. Lastly, keep your eye on the horizon. The mortgage industry is evolving. President Trump has openly called for the abolition of the IRS and a permanent end to federal income taxes on tips, overtime, and retirement income. If that happens, and it might, the entire mortgage underwriting system will have to adapt. Smart people are getting ahead of that curve right now. And if you're watching this, you're already one of them. So yes, getting a home loan after revoking your election is absolutely possible. You just need the right strategy and the right timeline. If you found this helpful, make sure to like the video, subscribe to the channel, and turn on notifications so you don't miss the next part of the series. We've got a lot more powerful info coming your way. And if you've got questions or want to talk through your own situation, feel free to reach out. We're here to help. freedomlawgroup.us